Hi guys, welcome to episode 14 of earnings season. I'm Randy Rowe at RT Rose, you guys know. So this episode, Dana and I sat down really and had a long chat. I'll give you the backstory is that we were recording the episode. We were about to record the episode, I should say. JPS, of course, did what it has been doing recently and like went away on us. So we decided, let's just talk. And we're having a chat eventually, like maybe an hour or so later, like came back. And we just kept recording the conversation. Went great. I liked it. I think that I liked it also. But like many of these things happen, sometimes you're only talking to your friend, it went long. Like really long. Now, I'm on record as saying that I really don't care if it's too long. The podcast lasts as long as it lasts. I just want the quality to be good. However, even I had to be daunted by this. Like, I don't know if I want to give people this long episode. I mean, it was over 3 hours. Lots of gems, but some people might find it boring. I think the people who really like it, the real fans of the podcast might actually like it. But just to be safe and not to take anybody out of them way too long, anybody complain, anybody sit and go, oh my God. So we decided that we're going to split it in two. So you get part one this week of what I'm calling, I guess, a second long chit chat with Danai. Or maybe, better yet I call it, it's the half earning season, because we did touch on a couple of companies. We did go through a couple of financials. We looked at stuff and the conversation was pretty current. So this is called it half earning season with, Danai and I. Like I said, we're dropping first part this week, and then you'll see us drop the second part, and it will say part two. So it'll be pretty clear, and I'll come in then also to just have you guys know that it's the second part of the conversation that happened that week. So enjoy part one of the half earning season, episode 14 of earning season. Hope you guys enjoy this listening.
So yeah, why I said I want to say financial, but that's a lie. I just made a lot of money out of Mayberry and MJE, MJE last year. Yeah, so because of it, I think of it that way. But that's not really it for me. I've made money across a wide spread anyway. Mm-hmm. So to say that, that's probably because it was really great and it was very recent. So that's why I think of it like that. But to be honest, that was not the case for me. So I found it hard to actually get up and say, what do I inherently understand or whatever, which is just, I know this like that.
Mm. I don't know. It's a really good question. What's a bias company? Mm-hmm. What company is?
I mean, finding the bias is really good,
We're recording? Mm-hmm. And we're good?
I'm full. So I can always cut this in. Well, finding the bias is really good because either you find where you shouldn't be, where you are only in this because I like it and I understand it, and I feel, and because I understand it, I see the potential for profit. So when the potential is there, but the management acting on it, so you're not really getting the money out of it like that.
Okay.
Or it's really good where you say or it's really good in the sense that you get up and you say, the opportunity is right there, it's happening, I can jump on it easier than everybody else because you see it. But I'm not sure my bias is. I think that's where I'm young in this, if anything. I don't have a widespread to say, I've looked at, but then I have looked at the whole market.
Yeah, it's never, all right, I want to go.
You look at the whole market way more than me.
Yeah, as I going to get myself in trouble and say that maybe we just don't have, all right, the question is, do we, what's a bias company? So it's a company that you like and you're in. And you bias towards
the sector.
The sector. So whenever something in it happens, you're ready. So if there's a company IPO in there, there's a greater chance of you missing something important that might be bad because you like the sector so much that you ignore it. What is the sector? Which company is that? I don't know. It's such a good question. I don't want to say I don't have one.
Yeah, I don't. That's why I'm giving myself. That's why I'm giving myself the leeway to say maybe it's because I haven't been here long enough, or. Statistics. The longer you're in something, then the more test cases you have for it. So you can say, but I have a wide spread of companies I've made money in across many sectors. If I was in here long enough, then I could probably test myself more to say, this is where I gravitate towards more. General troubleshooting.
Yeah. And you see that same general troubleshooting is probably why I want to say I don't have the bias for industry because I approach every company the same way.
Exactly. And that's our method is, but if you don't understand it, it don't make sense. So you have to understand it beyond us. I feel this way about it.
Yeah. I
And
mean,
you aim to understand everything on the same level.
let's use the time and start the podcast. Hi guys, it's earnings season. I'm at RT Row, Randy Row.
And I'm Danai at H.Danai.
And as you hear, we've been coming in for a couple of episodes, mid-conversation. Then I had asked me a question. We were talking about something else before we started recording. And then I had asked me, what was the question, Danai?
What's your bias company? Because I saw, or not company or sector. Because I saw Ryan big up 5 Saturday on Twitter, customary shout out every
Mandatory.
week. Yeah, but I saw him say something on Twitter about manufacturing and manufacturing being his bias area, what he likes, because his sweet spot. That's his zone, because he understands the companies really well there. So, and he's seen where he's invested in them and made good money out of them based on his understanding of them.
And I think that understanding has spread. I don't want to speak for him, but he'll tell us next episode.
Yeah, man.
Next episode he's on, but because I know like in the overseas market also he pays heavy attention to. Yeah, I don't know. He chose a wide net and then pay heavy. He was calling Nike long before.
Yeah, he has a wide net.
Yeah, he was calling Nike when people weren't even taking it serious. I think that the run is done for Nike, right? There's nothing coming back. And Nike, no, I think from his calling is Jamaica level percentage increases on US stocks. That's my experience with Ryan over the years.
Ryan understand business, understand companies.
Yeah, so it's funny for me to hear he said that he says that's his bias.
And I think that's why I took it seriously.
Yeah, but locally, I know he's heavy on manufacturing and distribution. I think.
Yeah,
I know he knows distribution.
If anybody else said it, I don't think I've taken it as seriously as if it was somebody else. So Ryan said it, so I said,
but somebody had said to me that Ryan is biased, that I probably would not believe.
Oh, yeah, probably.
Based on what I know of them, but based on what I know of him,
and you hear him speak on a wider range. So
yeah. But that's how you go in investing, right? You know, it is. I remember I'd said something, I think the very first episode that we put up with David, I'd said something like that that's one of those things in investing that you start learning so much about so many different things. Yeah. Yep. Anybody who start paying attention to the stock market in the first week that you're actually taking it serious, like taking it serious, I mean you're trading, but literally just looking on things, you don't even realize the amount of new things you learn.
Information
from a wide
cross-section of areas. Like, a lot of uninformed opinions, not about a lot of things, a wide range of things on Twitter or people talking. A lot of times in my head, because of where my position in the market or where I look at the market, I said to myself, why are you reach these guys are investing, because they probably wouldn't think like this. Yeah, because it does shift a lot of how you think about things. You approach everything from a position of, I know nothing, let me start from that and let me understand from scratch. Yep. Yeah, people come growing up and say, yo, I always talk about starting from the look of a company. Looking at a company as somebody who knows nothing about the company. So you start from step one. I won't get the whole of the step then, but them know the step, but the step one, which is a key step, all of them key, is know what a company does for money. Not what them say them do, not what you think them do, what they actually do for money. Yeah. And then I need to get a new example. I always use a Grace example. Yeah. What does Grace do for money? I've even done it on the podcast. I think Grace is the best example because the perception is so large.
Yeah.
And then the reality.
And that would be our pizza that we ordered before we started. All right, so we're back after the pizza. Yeah, I was saying that one of the things that you have to do, the point to start from, is to know what a company actually does for money. Not what them say them do, what people think them do, what everybody knows say them do, what them actually do for money. So, and I always give the same example, which I know now I have given on the podcast before, the Grace. And it's not Grace Foods, it's actually Grace. So the thing in Grace that makes money is not Grace Foods, it's money.
Yeah.
It's not, wow. That's a mistake to make. They are Western Union. Grace's company is Western Union.
Western Union, which is they're doing things with now. They recently put out that they're doing online orders for Amazon.
Yeah.
So
I saw that.
Yeah, we had a bit of a conversation about it where I said it really attacks the unbanked. Jamaica,
heavily unbanked.
Everything that's in the financial sector wants to attack the unbanked.
Because that's how you broaden your universe.
Yeah. And with a huge percentage of Jamaicans is unbanked. So what that does is, basically I was looking at it and I said, a lot of people don't have a bank account, but they use Western Union. and that really it cuts across a space, so you don't have to go through the bank to get a card, so you can shop on Amazon. No, you can just look on Amazon and you can use Western Union to buy through.
Yeah.
Buy goods. Buy anything you want.
Those people are already exposed to Amazon. They have the American TV, bodies on the internet. Everybody know what's up. I mean, you've seen the lines outside of Ship Me. There's Circles, there's Rocket Ship JA. There's all of them now, and they're doing stuff. There's Mailpack, who is now going to list themselves.
But look at thing there. Look at downtown. Downtown's culture is we have a lot of street vending, and a lot of people are selling clothes online, clothes that they buy online, and a lot of it is somebody online abroad and them selling it for them. And a lot of people that do informal vending, they don't actually have bank accounts.
Yeah,
I saw that. You see that a lot. We know we see that a lot.
Yeah,
sure.
You see the numbers. There's a lot of stats around it.
Yeah, so
heavy unbanked.
And even working in the financial sector, you see people like when they finally come to open an account, they've been operating for years, but they had no incentive unless an IPO come or then finally somebody showed them the light. Say, yo, banking really helps you. So a lot of them don't have bank accounts. But I'm sure a lot of them use Western Union.
That's true.
Yeah. And imagine now I can get my goods that I want to sell on the street from Amazon because Western Union facilitates it. So there are a lot of niches that that implementation will pick up. So that's really good for them. But that's a tangent.
That's fine, yeah. But the original point was...
Yeah, so the biases. Yeah.
So if you had a bias, I don't want to drop it on you. I really want to think it through without hearing anybody.
I think I have a poor... I think, as I said before, I don't think I have recognized my bias in that aspect. I know my biases outside of them. My biases that don't lie within specific sectors. So, those type of things that I will look for. Or, everybody have to find the biases. You have to find what you do or what you like that will lead you into a narrow mindset around things. So, yeah, you have to acknowledge your biases. You have to know where you're falling down. You understand yourself so you can invest better.
That's 100% true.
Because the best place you can invest from is logic and no bias.
Yeah. Yeah, the bias is dangerous because it blinds you. But then I feel like a responsible response to that is to admit that maybe you just don't have a bias in terms of a biased industry. Maybe you don't. Yeah, because I honestly don't think I do, but I'm looking to see which industry do I really like.
You've been in heavily.
Yeah,
I like companies more than I like industries. And if I like an industry, it's because I like what a lot of the companies in that industry are doing at any given time. So it's more that I like the companies.
Yeah. And of course, some industries are nice to be in. I honestly don't think I was what I'm called official industry. There's finance.
Finance. A lot of our market is the finance industry. So if you like the finance industry, if you like a lot of companies in the finance industry, then is it that you have a bias in the finance industry, or you just that you find yourself there because you're doing well? Yeah.
So for me, what I'm thinking of, I want to answer your question as honestly as possible. So it's not bias in terms of what my portfolio is weighted in. It's not. I don't think I buy with a bias. I look at my portfolio as soon as I have it open, but I already know what the money is and where the money is. So it's spread well enough. It's diversified well enough. But
get a rich man terms there.
Oh, wow. but it's not. Like I don't feel a joy when I hear a certain kind of company listing. And I was like, because that's my kind of thing. I don't want another bank listing. Because we have a couple of banks are not listed, right? CIBC isn't listed. Are they?
No, they aren't listed.
Anybody on the market own a stake in them?
I don't know if they're buying. They're selling a huge stake right now
to
the South American people
conglomerate.
Yeah.
Somebody else making move within the region. Isn't that funny, right?
Because Jamaica, because right now the Caribbean market is really going well.
I think what's happening in the Caribbean market, if I have it right, I could be wrong, is what they call the de-risking. So the North American companies and I think maybe some European companies have decided based on their own tables and their own things that they're looking at that they're removing the risk of Caribbean operations for some reason. Who knows? It could be maybe some impending IFRS change, like 5 years, 10 years down the line.
I would really hate for it to be actual the de-risking as we've been exposed to it in recent times with the AML
But that's what
CFE
it's
issues.
based on, because I've seen complaints. If you look on the
Oh, yeah,
the deep finance side, you see complaints for things like Jamaica has too much US dollars. We have too much US cash.
You know who can speak on this?
Who?
Kalila, because she was heading the speeches at the GIFs, Jamaica Bankers Association. They had a whole thing about the risk and whatever, and she was leading the ceremony. So
okay. She was
so
doing,
yeah, I was there.
She was emceeing.
She was emceeing. So we were exposed to a lot of that. They were talking about our correspondent banks, how to maintain a correspondent banking relationships because of the whole us going on with the AML space right now, the anti-money laundering, counter-financing and terrorism, where Jamaica is posing a risk because of the scamming and those sort of illegal things, that also washing money, and because of our informal economy and the low banking rate in Jamaica.
Okay, so they had the whole heap of people.
People
Heavy
wash
unbanked, and yet there's a whole heap of money. So there's opportunities for money laundering. It's not even necessarily within Jamaica.
No, it's
other
Caribbean.
people externally,
yeah, definitely.
that use a weak
financial system.
Yeah, they come in and they use it. Yeah, so
it's funny though. So somebody there, one of the speakers, he was speaking about how in the US, it isn't that these things aren't happening, but US and the UK really, they have the privilege of being the correspondent banks.
Exactly.
So even though things are happening there, they can say, "Hey, we don't want to take on the risk of being associated with outside illegals." So we'll put the heavy sanctions on them. We'll put the heavy framework on them of the old KYC and that. But in our countries, it can be lax because guess what? We have to deal with our things. We don't really have to deal with you.
Yeah.
So we make you sort out yourself to
Deal with us. Yeah.
We worry about us in our own time.
Yeah. And that might sound complicated. I simplified for anybody listening. One of the simple versions of that is like marijuana.
Yes.
Medical marijuana local is a great example of that. Like the truth is, it's just American and UK banks and European banks. So heavily UK banks, so England and America. We know them too. Them carry the weight. They say what goes. And really it's America carries the weight. It's the world's reserve currency, the US dollar. So it's not a matter of whether or not you're doing something wrong or right. Is I don't like it. This is the rules that you need to abide by that I like, right?
Yeah.
And if you don't like it, you don't have to follow the rules, you know. You're just not allowed to do any business with me. And anybody who wants to do business with me can do business with you. That's America's real power. So that's why the local bank or financial houses, even if they want to collect money from medical marijuana places, they can't because the US say, yo, to us it's illegal. So we can't do it and you can't do it either. You can do it if you want, but you're not going to be able to touch our banking system.
Yeah.
So the real threat is like if a NCB or a Sagic or a Scotia or anybody actually accepts money from them, from one of those medical marijuana places.
You have illegal people there, guys. So guess what?
You get cut off and you can't go nowhere else because anybody who do business with you can do business with me.
Client of a client.
Yeah.
So
it's a power. As always, a rich man make the rules.
So I know we're upset with the government because them don't fix up marijuana industry, but in reality, they kind of really can't at this moment. If you want to think about it in Jamaica, lose that correspondent banking relationship and you see what happens.
You're mad?
As you said, the world's reserve currency. Imagine we can't trade anymore because we can't get any more US.
Well,
where Venezuela at that point.
Yeah, no remittances can come.
No, exactly.
There's all sorts.
Everything just shuts down.
Yeah. But hell, that's another tangent.
Yeah.
Tangent too. We're talking about the industries. How does the market define industries? I feel like there's another part of that tangent that I've forgotten. But if I forgot to say it, if it's forgotten, it's forgotten. There's finance. I would know heavily biased to that, so we're talking about that first. Manufacturing. Have like the Saladas, the Sepras with Cinco, that's other thing. So from you make it in manufacturing. Communications. And under that they have like RJR. Yeah.
Keep on, there's no more.
Yeah, all right. Digicel Jamaica, it'd be nice if they listed. Not the whole Digicel, just Digicel Jamaica.
Yeah.
But then I don't think the whole Digicel would give. Well, they wouldn't have to give up, right?
I think it'd be a hard press because Jamaica supports their system a lot of digital.
Yeah, but you don't have to
group.
list all. Like, just list piece.
No, it's Jamaica, but imagine I give up the goal.
Yeah, but you're just giving up a piece of the goal. And
True,
you know, they're
true.
not really giving up piece.
Yeah.
They're
They control
getting
80%.
right now. They need some cash. I wouldn't be surprised if that's one of the plans to list your slower entities, your local entities, in order to pull cash into operation. You'd have to give up the whole thing.
You're right.
Give up 20% and get a big cash influx. Because you have some bonds to pay, and your bonds are bonds are low risk.
Low
right?
risk, so they'll be fine.
Right. Tourism and other services. I'm looking at VM Wealth. How VM Wealth sections out the industries. Yeah, so
I
retail.
think JC doesn't do a good job of it. You know, they have other a lot.
There's a lot of
Other.
Yeah.
What do you do? Other.
But
Yeah.
somehow Fontana made it on the MDI, right? That's funny. You have tourism and other services, like I say. You have retail, trade and conglomerates, which have in it like Panjam, Jamaica Producers. It's a retail, trade and conglomerates, and VM, the thing I'm looking at for VM has Sagicor Group Jamaica Limited under retail, trade and conglomerates.
Why?
I'm not sure why. I am actually not sure why.
Yeah, that's weird.
Maybe because like Sagicor has things like property management. I don't know if does NCB have any
Yeah,
property
but
management.
they use it now. Still financial.
Does a property management wouldn't necessarily be financial?
But how much of their operations are property management?
Oh, it's minuscule. I would say.
Yeah.
It's just that I'm thinking that if they have that, it makes them a conglomerate.
Conglomerate. Oh, sure.
Wait, they not own the Playa as a subsidiary of Sagicor Jamaica,
Associate.
an associate, which makes it a subsidiary.
No, not really. No,
Not in the technical.
not in
finance
technical, so,
term.
but we own piece and it's a part of our operation. So yes,
In technical finance, subsidiaries start at 51
51%.
or 50.01.
Yeah, more, if you have
50.1.
more than 50, then
More than 50%, then you're a subsidiary.
or if you look at KW, look how much KW JP owns. It's less than 50, But I think they have significant board control, so they can rank themselves up.
Yeah. The board control.
Which is what exactly happened with
Sagicor
and
with
Playa.
X-Fund and-
Even Sagicor.
Yeah.
The company that they hold Playa through has a certain percentage, has less than 20% of the Playa, but they have similar board members, so they say they exert
significant
influence over the company, so they rank it up to the next level, which is associate.
I think another thing that they listed was that they have they are either the biggest or the second biggest
The second
single
shareholder of the company.
in the company. Yeah.
Which is why I was looking at what's the name, WIG.ja and JAMT.
Them results drop yet?
No,
It's like a half earning season episode because half of the earnings come out so far.
But how much WIG.ja does JAMT own at this moment? But they have similar board members, and they have administrative control.
They share a chairman.
Share a chairman. So if they have less than 20, I wouldn't, or just thinking like a 19 or 18, I would see where they would just be an associate.
Make the case for them being
Make a case for an associate. And I think auditors would accept that.
if they want to.
If they want to. So if they're not, then I would see them holding QW as a trading company. So value of shares for sale, so the movement of the shares would be what would be recorded in their numbers.
You think they do that?
I don't think so at all. Because then they'd be moving from a revenue model of we fully consolidate all of QWI with 100 million revenue are there about from them on the day, which hit them profit line to.
But you have to back out, Oh well, you back it out on the OCI. Does it? You back it out under the net profit.
What's that?
If you're saying they would want to. What are the options?
I think they want. I think they have. So if it's less than 20% holding, then they have the option. Then they would be either OCI trading, the movement of the stock in OCI or in
No, you
share.
don't trade the movement of the stock in OCI.
Yeah, man. FVPL or OCI. You choose which one you want.
Yeah, but I'm saying if you trade the movement of the stock, then it's
FVPL.
Yeah.
Mm-hmm. I'm saying I'm giving options. So if it's the movement of the stock would be FVPL. If I don't want it FVPL, then it'll be.
You see it on the P&L. You see it on the profit and loss statement. Meaning, if the stock goes up at the end of the quarter versus how much it was at the last quarter, then that's considered a profit, and whatever the percentage is, a percentage profit they would make from that. And conversely, if it falls, then it drops. So if it falls, it falls.
I don't think they're doing that.
You don't see them choosing to do that?
Yeah.
Why not?
I don't know. It's because how they were recognizing QWI before. They recognized QWI as a subsidiary. So the trading games of the basket of stocks that QWI held would give them revenue.
There we go.
So they were booking 100 million the last quarter or so from QWI. So you're moving from QWI's actual operations to the movement of QWI's stock price. I don't think they're doing that. So I think they would want to keep some of QWI's operation on the books, which they don't hold 50%. I don't think so. But I think they do own either 20 or a little less, and they do have control in the company, some controlling interest, and I think they're the majority shareholder. And they have similar board members. They have board members in common. So at some level, I think they will be taking associate holding. So any money QWI makes, just share of profit or loss in associate, they're going to book for Jam will be booking from QWI. That's the way I see it going on.
And then you lose it on you give it back on the percentage that you don't own. Well, there's a finance term for that.
No, man. So I think okay. So I see where you're going, non-controlling interest.
Yes, non-controlling
So that's
interest.
for subsidiary holdings.
But isn't that what you're saying?
No, man.
Oh, sorry. No.
It's associate.
My brain not here. It's an associate.
So it's share of profit, share of loss.
Just straight share of profit.
Share of loss.
Okay, and as we have seen, especially over the last, if you watch the NAV and do the NAV math, you've seen that there has been a significant shift in the NAV. Yeah,
I think they made money. I need to go check it myself.
I saw people on Twitter saying that is a drop.
But the NAV should have the NAV would have dropped from the increase in the share capital in the shares that when the upsides offer. So if you do the maths and they have more assets today than they had before, then they made money. If the net asset value, not necessarily asset value per share, net asset value itself, the actual value from the
of
numbers
holdings,
of the holdings are more than they were before they listed, then they made a thing there.
Then they
made a profit. They made profit.
So in other words, people just haven't been paying attention to the fact that post IPO their share counts would have gone up more than double. They issued more shares than they had originally.
Yeah.
Yet the NAV
seems to be around what it was when they were IPOing.
Yeah. As of today.
I do need to qualify exactly how much of a move though. So we now record that.
Yeah.
We probably should be tonight.
I done it at Advanced Grow and but I didn't. Well, I'll say what I did first, and then you can see what the mistake was. So what I did was just in conversation. I said, let me just do it quick and work it out. So all I did was just take the current share count and divide the old asset value, the old total asset value by the new share count, and then just compare that number to the current NAV.
Wait, new share count?
Yes,
that's probably good. Then you probably.
Yeah, it was very good. You move from if you use a new share count on the old asset values, so from the prospectus, I think you get a NAV per share. I think the NAV is like 88 cents.
But did you factor in the new money they received from the IPO?
So that's what I think I did wrong. I didn't factor in the new money from the IPO.
So you have to factor in the new money and see if they actually made money on the new money.
On the new money, exactly.
So that'll be the difference.
That's precise. So that was a mistake. I know I haven't made that. I need to go back and
work it out.
Yeah. So put the old money back in, and then the 88 cents does sound
nice.
Small. Yeah.
Yeah.
But who knows? 88 cents. We double 88 cents because they pulled money for that money that they got, right? They got money for the shares they issued. So you double 88 cents. Then you looking at what? No. Then it would have fallen. Then he may very well have lost money.
But
so that's a matter people need to do.
Work out with the new share count and the new money they put in, and you'll be good.
Yeah. I think the people from Grow, they want me to send. I'm gonna send them some stuff. It's a nice gift. And maybe I'll do the work and just send it to them.
Send it to them.
a nice email.
Especially since you mentioned it at the time.
Yeah, especially because I run off my mouth on the podcast now. Say,
say, hey, I made a mistake, guys.
Oh,
so wait there and they come and pay money.
Like, how dare you not be perfect? Yeah, but
I strive to be at least.
I don't think that the people at Grow expect me to be perfect. I do think they tend to enjoy the event.
It's actually that's a good expectation that they don't expect to be perfect. It's when I just joined, I expected Randy to be perfect. Yeah, and I made a loss because I expected because of my expectation of Randy reaching into what it wasn't, into a place it shouldn't have been. Yeah. I heard Randy mention CWJ, I buy it because boy, this man mentioned CWJ, the price must be shooting soon. You know, I stayed out of MIG because of sarcastic comment he made. I was looking on the group and the thing there.
Oh wow!
You made a sarcastic comment about look at marketing because somebody was trying to.
Was saying that what them do nothing.
Somebody was trying to do anything, and they were trying to pick you to try to say, me mention it to Randy, go mention me and to give me the food, and you were not about that.
Draw me out.
Yeah. So you said, he basically said, it's not done. So yeah, man, it's not good for the IPO.
Main event.
My mother asked me about it. When it was listing, she asked me, then I hear me, because I'm going into investment things, 2017, that same year. 1917. Then I knew IPO coming out, you into it. I said, nah, man, not going nothing. Look at the marketing company.
God, you repeat. You copy the homework.
Same so. Then look at more Randy and them talking about how much they're making on me, and this is missing that back. I think Chadwick had told me to do it. Chadwick. My friend Chadwick got me in.
Shout out Chadwick.
People that got me into investing.
Yeah.
One of the people that actually got me investing. Man, investing before I was, and with him scholarship money.
What you say?
Yeah, man.
Is that allowed under the terms of the scholarship?
Oh yeah, man. So he got because there are payout part of the scholarship where you get extra money more than you actually need for school. So you can do other things with it, but his parents cover him basically beyond what he needs for the actual school fee. So he just invested that portion of it. And that's so I was in university and him telling me to invest. I was talking to Kim Boswell about investing, trying to pick her brain and get what she got me. Yeah. She got me looking at it because it was class and she was talking some interesting shit. That was probably my most interesting class because she was talking about actual money and beyond insurance, and that was not me for Oxide. Yeah. So yeah, she made me see that Oxide can be my degree was applicable beyond just going insurance or working for. Everybody wanted to work for Surgical or Guardian insurance. Remember, see, my degree was applicable beyond that. So yeah.
Well, big her up.
Yeah, man.
I mean, I rate her.
She's cool.
She's funny on Twitter and she does art.
Oh yeah, she does art. Yeah. So
and intelligent jokes.
Yeah, man. That's right. I really connected her. I rate her enough, man.
Yeah, one of those times when I changed one of those group pictures. In fact, I think the group picture is still a picture I stole from her. That she took a picture of her professor wearing a shirt that says the two types of people in the world.
Yeah, I remember that picture.
Yeah, that's a fire picture. Let me see if it's still there. I really like that picture. It's like, so people aren't lost. The picture says, "You guys, you'll have to use your imagination." I'm sorry. It's a picture. It's an all black shirt with white writing. It says there are two types of people in the world. One, those who can extrapolate from incomplete data.
And that is it.
Yeah.
All right. Let's see those comments, guys.
I really like that shirt. I really like that shirt.
Yeah.
I might have to go. I might have either find her and make that shirt. Pick up Kim Boswell anyway.
Yeah,
but yeah, so she did the same thing. She make it real and applicable to the practical, which I try to do with Girl all the time too. I try to show people in them real life. That's the one thing I talk to people them goal all the time, and I think people make them misunderstand. People misunderstand when I say goal more, especially because they say goal, and if you usually ask them what's your goal, and you hear them say, I want to make money. You go, no man. But
everybody wants to make money. What's your real goal?
What's your real goal? And then go, all right. When you press them go, like maybe 2 to 500,000, like 3 to 6 months.
Yeah, it's not much money. How we can go from there?
That's getting better, right? But like the real goal is you pick something out of the 2 to 500. Tell me, all right, I want to make $300,000. When you want to make it? 6 to 12 months? Pick a month, yeah. All right, 6 months.
Picking timelines has helped me so much, bro.
Yeah, it changes the entire face of investing. I see these are the sort of things I wanted to tweet about heavily and bring the market about. the industry not with it at all, and the people some of the people in the industry not with it at all. Them more.
Yeah,
if you're not saying what Buffett
you
said,
know, you can't
in the way that Buffett said it.
Okay, I'm going to say Buffett say it too, but all right.
Yeah, well, if you actually follow Buffett, you know him actually said that, right? But literally it makes a world of difference.
Yeah.
I hope somebody listening to this now learns, because I realize it's a lot of the talk, especially since I stopped arguing with people and quarrel with the people, and you see the language has shifted, the tones have shifted, and most interesting to me is that the things that they say have shifted. I see people now saying things like, what's long term to some people might be short term to someone else, and vice versa.
I think
it's
a good impact, you know.
Yeah, it's a good
Your
impact. I'm happy to
detractors
see.
are
No,
check themselves and say, oh, you know, so that makes sense. And
I hope that's what it is.
I want to be like that but people I'm a detractor too, where I can say, hey, maybe I was wrong, you know. 'Cause it's great being right all the time, but eventually you're wrong. And when you're right all the time, you get this kind of cockiness. Yeah. If you're wrong sometime, you kind of learn and say, hey, I'm not the perfect guy, and I have a lot of space to learn. And when you acknowledge how much you have to learn, you're always in a better place.
Yeah, nothing nice like getting something wrong, because now you have an opportunity to learn. Yeah, but a whole heap of time you miss the lesson if you start bring anything other than the actual lesson into it, you might miss the lesson.
Yeah,
and one of the easiest things for all of us, myself included, to bring into it is ego. Yeah, man, kill the ego, because you might learn so much. For me, I wanted, and I still want, to get everybody investing, make them see it, make the money, and I say, yo, I need for. Well, I don't know if people have heard of Khalil.
I love that competition on the market. Imagine where I have, like, yes, there and now, but I don't feel that pressure to be the guy there first. Imagine, oh, yo, just off this news, it makes sense to everybody, and everybody start rushing to it.
Yeah,
efficient market, a much more efficient market.
That's what
where
I
have to see
wanted
the news before the news comes. I want to be that place.
And I imagine that, and I wanted to, and I still, in some ways, want to engender that in the market, because especially the professionals, because the professionals that have to do that, but the professionals not with it at all.
Yeah, but
why compete? Like, they don't understand why compete. I never expected that question.
You know,
you compete because you want us to get better. You know why European football is so great and so far ahead of the rest of the world? Because the competition within Europe is so intense.
Competition, struggle make us stronger.
Yeah. I think people think competition is a bad thing.
No, it's not.
No, I compete with people I respect.
It's only bad when you add your extra feelings.
Yeah.
I don't feel away losing to Randy, because no, Randy can't tell me what he did. I never know.
And what does losing to me look like? Oh no, you went 250 and I went 200. Oh no, right? That's what competition do. Because before, maybe they did 10. A little competition,
I learned from that.
It's weird to me.
Investing for 3 years, and I tell you, my returns are crazy for those 3 years. And just because
I run the private, when I was running the group, I am always trying to put a little bit of competition there, because it brings the best out of people.
Portfolio is doing, guys, and then I'll talk about where we are percentage wise. And though I get a lot of the new people, they always message me. I think you used to get this more a lot. New people, they always message you one side and they're not really doing well in the portfolio, or but numbers look nice. No, man, talk the numbers, because guess what now? I get ask you why you reach there, and you get tell me whenever do, and everybody can have an input on, yo, you should have do this, or yo, that was a good play. Maybe the play you took, like, reach a 30%, no. 2 weeks time, because what you saw don't materialize it might be still be there, but you feel bad because everybody has 70%, you have 30%. But in 2 weeks time, everybody can look at the play you have and reach 70, and you reach 100% next week, and everybody on the same play with you.
There we go.
It's always good to talk about what you're doing and things. So, and if you have something wrong, that's the best time to talk about it, because guess what? You might be in the stock, you make a 10%, and you say, boy, it look good for the future, and you know we're talking. And then they show you that maybe this 10% is the best you're getting out of it, because you get make a fat loss next month. So time to be out.
Yep. Who did I do that for recently? I don't know if I want to talk to people in business. I won't call them names. Big up a certain person who they messaged me recently, yesterday, and say that they had spoken previously, and we're talking about MDS.
Oh, I think I would say message. Same
MDS.
I'm big up you because I like his drive.
And I respect that. I respect him. But the message essentially say, yo,
Save you some money.
thank you for saving me.
Yeah,
Because as you can see, MDS results just drop. We bring them up as we talk, and I think they just pick up a heavy loss, right?
not the last profit was way below.
Yes. When I said yes, loss, but you know what?
Well, that's on the quarter to quarter. Yeah, man, I know what you're talking about. You know, the loss in the miscommunication that might happen because of it.
Yeah. Oh God.
Always, I learn from that miscommunication.
Yeah, so let me be clear, and we should be clear because I always pressure the people in finance that they need to be clear. Yeah. So I try to be as accurate as I can, especially when something from the podcast, which is why we throw things in the show notes. When we talk about the MDS, the Medical Disposables and Supplies Limited, that just dropped their 6-month results and the financial highlights right at the start. I won't go too deep. Revenue for the last 6 months results mean 6 months.
6 months.
But we know that companies report every 3 months. So this is really the second quarter results. But they're also telling you what first quarter plus second quarter is. 6 months. On the 3 months ended September 30th, so that's July, August, September, they pulled in revenue of 565 million. Same time period last year, July, August, September, they had pulled in 500.9 million. So they make about
13% increase.
Yeah, or 64 mil, 13% increase.
Profit.
Gross profit.
Okay, cool.
But I'm gonna go through it nice.
Yeah, man, that's
a nice
fine.
episode since you know since we're going on so much tangents.
Yeah.
Tangent two. Let me give them some gems.
I always go from the revenue and profit when I'm talking to people. And I think you face this. They think you only look at two things. We know where we look at everything. Where the money is lost if they never continue.
Yeah. But you're right because of the conversation, especially because of how I speak and in words you and I speak similarly.
I know I don't like to talk a lot on certain things. So
yeah, well the people know you don't like to talk a lot on the podcast where you have to talk.
Yeah, man. So I have Twitter. I don't make a lot of tweets because I don't want to be making a long thread. I know there's a lot of things I can drop, I can talk about. But I get tired thinking about speaking about that much, so I just don't bother.
Yeah,
I'll try, guys. I'm trying more.
Yeah,
but yeah.
I mean, do I try put it out there, show the people because there are people. What I've found, one thing I can tell you that I've found, there are a lot of people who see it, but maybe they don't interact with it, but they do look out for it.
Oh, definitely. Yeah, I have a couple DMs where somebody say, "Yo, they saw the tweet from before," and I mentioned whatever.
Yeah, there's another name, a boy. I'm so very careful. I don't ever really want to call people's name. And sometimes I ask people, and they're like, "Yeah, man, of course you can big me up." Other times they're like, they'd rather not.
You want that heat?
Yeah, they don't want the heat. They don't want the noise. And I can understand that as somebody who, believe it or not, don't like it. So I try not to call the names too much. So, but this person messaged me again, and this one is today. And she said. She shared a tweet of mine. So I can share the tweet that it was. It's a tweet of mine where I said that from August 12th this year, where I said that I've been looking at Pulse for a few years now.
Oh, yeah, man.
Yeah, let me read the tweet. I've been looking at Pulse for a few years now, moving in and out at various times and keeping a few units for the long term, which, you know, I have said that publicly, I think. Well, obviously I tweeted it and I said it at a couple of girls. And I exited for my own reasons and sold those units earlier this year at a nice little profit. But Pulse never left my mind, right?
And he's quoting a tweet from?
And I'm quoting a tweet from July 4th, 2018.
Yeah, where he's talking.
Yeah, and in that tweet, I'm talking about an email that I sent. I don't know when I sent this email. At the point in 2018, the tweet says that I had sent the email 2 years before that. 2 years and 2 months before that. And this was in July 2018. So 2 years before that, 2016. 2016 thereabouts. So that was me, and the email is me. Guys, check the show notes.
Nice things about Pulse,
it was me. Well, not even nice things, just looking at what they were doing. Yeah, doing a quick little analysis of it, and sharing it with a couple of friends of mine. I'd started saying, "You guys always ask me about stocks. Let me try.
Let me try to help you out."
Yeah, since I'm always talking about it. Plus, it helped me at the time to put together my own thoughts.
I think I need more of that. Definitely, I need more of that.
Yeah, try it. Try it.
We spoke about this,
say it to anybody.
Maybe something coming, guys. Maybe.
Yeah. Big up Shani, who does the same thing. She showed me a PDF she did for herself, and that's how she's doing. She's looking at a company at the time. She was looking at MPC, and she put together a little document for herself, PDF. You know, she just put the share price in there. She write, okay, so this happened, that happened, share price dip. It's cool. Some people think like that. Some people don't. It work for them. But I realize for me, it works.
It works.
Yeah.
I write out. You know, I work on events. You work on events. I write out what event will
Impact
this company
is expected to
and
impact,
then the impact on the stock price. If it will be material to the company, I write out my companies, whatever I'm looking at in whatever period of time, look at the period it will affect it, and then go. I don't need as much as I should, but I have my notes all over the place.
Yeah, I make notes myself too, along the same lines, and reminders.
Yeah,
and those work. It's like a little message from past Randy. Pop up, pop up today. Hey.
Yeah.
Look at Pulse. They're about to report their Q1 earnings, and I'm like, oh wow, thanks, Past Randy. I check, and
here we are.
Or sometimes they say, yo, remember to buy Pulse because they report their Q1 earnings in 2 weeks. That's all.
The best ones, remember to sell.
Yeah,
because boy, you know,
the sell ones are important.
Done, you know, so the run down, sell.
Yeah, knowing when to sell is even more important than knowing when to buy. Yeah. If you don't
need to sell, you never lose. If you didn't buy, you never make money, you never lose money. If you sell at the wrong time, you very likely lost money.
Yeah, selling involves a situation that can have a money loss involved. Buying involves a situation where you are okay before you're about to embark on something that could screw you up. Buying is an increase in risk. Yeah. As you know, I listened to that episode where we start off talking about risk about 10 times. Obviously, I listen to the episodes a lot because I have to listen again and again before I do the show notes or whatever. But I really like that risk episode.
I think risk is one of my idea of risk is one of my profound thought processes. Like I really think about that and the way it actually works in real life versus how it is presented and calculated. I was actually really good at it. Like we had some level of risk in Cape Math, probability. I'm really good at probability. So that was...
Which is the same thing, yeah.
Yeah.
Risk is probably, yeah.
But quantifying risk...
And applying it in real life.
Applying it in real life is very different from putting on a piece of paper and telling me, oh, your probability distribution going to do whatever, so I have X percent, 30%. Like it could have... It might not be real because it can mimic, but it's not very often that things will fall within the parameters for you to quantify risk in that way. So sure, in a lab, sure you do testing whatever. On a stock market, when you have so much information that's not open to you, then good luck, bro.
Yeah, and you have to be able to stay on top of the information, apply the concept that you would have learned earlier.
Which is information is always what cuts down your risk. The more you know, then the less risk there is.
That's right.
Give me a guy that read the future and many will make a lot of money on this market.
You're right. Because what we do is we try to be as accurate as possible and read the future things. Yeah.
And you know how it feels when you buy something and a shock hits the company in a bad way. Like, CPJ.
That happened to me. Go finish your story.
CPJ with the failing with their IT system.
Yeah.
I'm sure other people were very optimistic about CPJ at the time. And
I was looking
and we spoke about it and you was like, it might be a pop off time, and look what happened. So so you have to look at that. So see what do I know? What can't I know? If it's certain things they can't know, you just can't know. Be okay with what you know, and if what you know is enough for you to put your money on this. So you have to know where the best case it can be is where if everything you don't know can't really affect the company as badly, so you can go ahead with what you know and make an investment. So what you know is so good for the company that what you don't know, even if it puts a segment of the company in a loss, what you know is so good that boy the profits fly anyway, then you're good.
I like that.
But loss is always an opportunity. I'll tell you, Randy, I was going to speak about this on Twitter, but I didn't. It would be a whole thread on Cygnus, where the Q1 last year, they made a loss. I'm expecting strong results in Q1 this year. But the way it's structured, the way we probably look at companies over 12 months period of time. So if Q1 last year was good, and in Q1 this year is better, then they expect that the price will better meaning more profit, then you expect the price will move up. Because of a PE, well, profit is poor. Profit is the best metric you can use because no company exists outside of being profitable.
It's the purpose of a company.
If it's not profitable, then if it's not to be profitable, then its purpose exists separately and you probably don't want to own it.
Exactly.
And you probably don't want to be a minority shareholder.
True. What value only has a value to those who value.
To those
right?
who exactly.
Or its value is value.
Yeah.
Pick up Dyson for that. But
Signals.
well, we can make it simple. You can say for-profit companies. That's the idea. The idea is that if you're a for-profit company,
yeah. So they make profit last year and they good this year, and profit is better this year. Expect that, and it's a good price range. Then share price likely increase, very likely increases. Imagine they had a bad year last year, and then have a good year this year. Then, in a way of when that bad year comes off of your 12-month valuation, then the company looks really nice. So Signals, they had a loss, but all right. So I want to say it's not a real loss, but it is a real loss because value was lost in the company. But
say why you go ahead.
You know why I want to say it's not a real loss.
No. I want to hear.
So I hear a lot of people. So it's something I speak out against the people that try to say that revaluation of an asset. So the movement of an asset's value shouldn't be factored into the valuation of a company. So they bought some USD, they bought some JMD or so. They bought some currency above the actual trading price for the currency at the time.
Okay.
So they booked an immediate loss. So basically, I buy some box for $20, but the box is worth $10. Then in reality, then
you have to book the fact that you made a loss.
Book the fact that I made a loss. So that's what happened with Signals. They bought some currency higher than the trading price. The price
or
never.
They bought some currency and the quarter ended.
The quarter end, yes. The quarter ended below where the price they bought the currency at.
On average, yeah.
Yeah. So at the end of the day, they booked a loss. If you looked at the operations of the company, they were the actual core operations of the company where they lend money, they finance companies in their operations. Then they were quite profitable, but because of what they took the money and did with the buying of the currency, then they booked a loss because of it. So when I looked at that, I was like, all right, so we book a loss. We actually lost money, sure, but the core of the company is still strong. And you can see over this year how well they've done with their operations. They had a great year, except for the Q1. So Q1, Q2, Q3, Q4 was great for Signals.
Which means that there was a shift.
There was a shift.
In the year, so.
Exactly.
Yeah. You just chose a very complicated way to say that you really like when companies go through problems.
Yeah, man, definitely.
Yeah.
I want to be as technical. I want to be technical in this case because I don't want to tweet the technicality.
I get you.
And I want to be technical so people can understand what I'm looking at
from a technical perspective. Yeah.
Because you have to, it's best when you can get technical.
Yeah.
You need to understand what's going on.
Exactly. And if you don't understand it, you can't get through the technical.
Exactly.
Yeah. Simplicity first. Simplicity is the first step.
And simplicity is to survive.
Big up
yeah,
Kalanji.
But yeah, so Signals looks great to me not because of the loss, but the loss really helps what happened. So Q1 to me looks very nice because of that.
I like that. It's an easy way to know when you can get a profit in a year, 1 year profit. Easy way to see it is if a company, nicest thing is if a company goes through some trouble for the first 2 months.
Yeah.
And then them fix it in Q3. And sometimes them fix it in Q3 and Q3 kind of iffy, but then tell you in the management report, say, yo, we have fixed it. Or you see the signs that they fix it. Then Q4 come in and Q4 good. Q4 is strong. And the reason for it being strong is
because that same thing.
Because we have fixed it. And them say it in them annual report, but by the time annual report ready to come out, the new Q1 come around and it's being compared against a weak Q1. So now you're looking at a stronger entity being compared against what it was when it was going in its problems. And that's why you get those little headlines that push the market. Things like 110% pricing, profit increase.
Yeah, man. It took me around to look for that. This is where we discuss companies that are going through bad times or a bad quarter. Because now we can say, all right, guess what? We like this company, but I don't have to invest right now. I can make money elsewhere, and when that money is done made, I can come back to this company, invest it in this company, and compound that money I just make. So it delays your investment. So you can say, all right, so one year time I check it back, I can make money out of these other 5 companies for this whole year, and then I have my next investment planned it a year in advance. So I line up a lot of bad things going on in companies. I mentioned one other day with Ryan on, when we had Ryan on, where I said separate when they fix up what's going on with right now. Separate strong pipeline. They actualizing the pipeline. They're buying in. They're rationalizing the Nestle operation. They bought from Nestle. The Bagwalk factory. They have the factory space. They're using X amount of it. And they plan to rent to people.
Facey. Phone card and so then make them 1%.
Yeah.
Whatever.
So and the distribution line is being helped by Akka and Facey Commodity, which is a distributor. Separate heavy manufacturer. We have a proper a heavy distribution line. It really helps them. So
and they're pushing new products.
But they have this big loss making part, the sugar.
The sugar, correct. So people think once the sugar is off the books. They'll be pretty.
Once sugar is books properly with the rationalization of these people need to get them paid.
That's the next step that people don't make, right?
We should
So
last quarter.
I hear all the analysts saying the same thing and say, "Oh, the sugar. When the sugar come out, how many of them have gone back? How many of them have gone back to check and see how long it takes something like sugar to come off the books?
Look what happened. Thing there.
They had to spend money. They had to buy the thing. They had to buy the entire company so that they could hold it. That's money spent. And so there, of course, is money spent to hold an asset, but it's an asset that you're looking to shutter.
Yeah.
So during all that time, your time
have all this stock.
Yeah.
But sugar. You have cane growing in them. So you can't say, all right, we don't need sugar and just walk away. You put money to those canes.
Exactly.
If you write it off, then you don't want to do that. So you have to sell the cane or the sugar.
The actual financial process of writing it off and getting it off the books is not a 1 quarter thing.
Not a 1 quarter thing.
Yeah. It can take years sometimes.
Look at poor AMG.
MG suffered for a long time when they made that issue with
the shot of that thing there.
Tissue.
Yeah.
It took them a long time to get that off the books. But if somebody looked at that, they'd understand then how to time separate. It's not that separate is bad.
But separate those, they'll be back down for a couple of things. But look on thing there. Look at last quarter. Same thing you said, the analysts were very strong on separate and we were looking at it like, why they separate? Like, no. Separate isn't the same to the last stock. So separate trade the same to the last. Back down to 50 now.
Yep. So if you heard them talking about it, if you see people on Twitter saying it, if you never believe, if you think these people know it, or you go inside the brokerage and the person, them not tell you nothing and them just throw it out, or you say, let me go find out on your own, whatever. If you spoke to an expert and expert is telling you separate, then you need to go back to the expert and explain what happened and have them explain it to you. Yeah. Not that they're wrong or whatever, but they need to explain it to you because time periods matter. So of course, if you're buying for 5 years. You don't want to say don't matter, but the truth is to me it matter, right?
It matter, yeah.
Because it's the same point I made with X Fund at the time. That it was obvious to me, and I don't think I did anything special. It was obvious to me that they were about to pull a huge loss, right? It's the same thing like with Separate. Separate is not about to pull any huge loss. You're actually doing very well.
Very, very well, yeah.
But if you are looking at buying it with the intention of getting your immediate benefit when sugar leaves the books, because I think the number mentioned was 300 and something million that's expected to come back on into in terms of profit once the sugar stops. The loss isn't there anymore. Then you need to know how long it's going to take them to take it off the books, and then maybe you don't want to buy it when it spiked now in the expectation of it coming off the books, because people like me will see everybody saying it and I say no and it's ignored and I see the price spiking. And I will sell because, of course, I have no issue selling at 70 when I know this thing is worth 50 right now. And then when it come back down to 50, which is where it is right now,
buy again.
You buy it back.
So we're friends again, guys.
There we go. And the difference between the two, that's like a 40% difference, you know. If you
70, yeah, it's actually 40%.
That is serious.
The last, yeah. Look, what was I saying?
No, you had actually jumped in on my points. I know somebody's paying attention. Because them say, yo, this tangent thing is really serious. This tangent is really serious. Finish the X1 story and I'll try and wrap up the tangent. Because I know my way back.
We're in a group. We're in the group together, me and Randy.
People start stressing about joining this group yet?
Yeah, man. Randy, we were out yesterday and girl bad me up and say, why do I add me to the group yet? Never met her before. But yeah.
Big up she take her money serious.
Yeah, she does take her money very seriously. Big up. You're really doing well. But yeah, X1, me and Randy hadn't had much conversation one side about X1. But reports are dropping in the group from whichever broker saying, yo, X1 is a buy, whatever. People in the group were all hyped for it. And I said, is me missing something about X1? Where the money coming from? And they said, thank you. Cause yo, I've been on the same thing. And that's when I had the conversation. It was just obvious to us that this thing not going to really work out. We know we know how they're booking player.
Mm-hmm.
We go and check what's going to be material to that booking of player, which was the movement of the share price. And that was just sinking quarter on quarter. So we say, look at that loss. And lo and behold, losses upon losses. But yeah.
They ran into a heavy loss. A loss so heavy that it looked like it was a big loss.
Big loss because their whole hotel operations.
Almost all, because not all of them.
Yeah, man. Yeah. So what they sold out and what they
got money back.
They were in a loss despite having the one hotel and compared to the hotels they sold and then bought into the company that now holds the hotel. That from billions to billions profit, billions loss.
To negative. I think they made. I don't get it wrong. I think they make something like $15 Jamaican. I got 15,000 Jamaican that year in profit. That was
crazy
wow.
to me.
Yeah,
and that was helped by the reworking of how
they chose to recognize
thing there. Yeah.
Which is how we started. I like that. You look like you're rapping the tangent. So how we got to this tangent was I saying I'd been the person who sent me the thing that I'd said about Pulse. And I was going back to talking about how long it is that I've been watching Pulse and going in and out at various times. So I went all the way back to the 2 years before 2018 because when I was looking at it, I was looking at it initially at $1.8. $1, remember 1.8, $1.80. This Pulse email that I'd sent in 2016, I think, or 2015, whenever it was I'd sent it just as a couple of friends. And my initial, it was a follow-up email. So my initial email was saying, I like how Pulse looks and it looks really good to me and I'm buying some, blah, blah, blah. I was buying it at $1.80 at the time. And then when I'd send the follow-up email, it was at, I think, $3. I have it in the email, so I'm looking at it at $3.23 and that would be 20, when? That would be 2016, yes, 2016. I know I'd sold, so that's a nice gain, right? Nice gain. In fact, I remember saying it there, 79% in 4 months. So that's pretty good. And since then, Pulse has continued to be very, very nice. It fell. It went all the way back down. You could have picked up Pulse, I think, up to last year.
You were picking it up at some time.
Dollar a little bit.
About the management fees coming on.
And now, as of today, you're looking at Pulse where Pulse closed today, so people can figure out which day we recorded this. Not that we usually hide it, but you can figure out what day we recorded this based on the price that I tell you that Pulse closed today. So Pulse Investments, I know what's them name? Pulse Investments.
Yeah.
People said they're not core anymore. They stopped being Pulse Modeling some time ago. They're a company that makes investments in real estate and in modeling, of course, still, and production and so on. Anyway, so them closed to that $5.01. Wow. I did not check the market. Wow.
So yeah, man. They're doing really because two proper causes of profit.
Yeah.
Pulse Investments. They say I like the name change because the name change shows where they are.
Yeah.
What they're doing.
About what I'm doing.
We are a real estate investment company.
Yeah. So let me switch to talk to Pulse. I'm sure some people want to hear our thoughts on Pulse, but I'll wrap the initial point, which was that I shouting out the another young lady who messaged me, and she was saying, she just thanking me because she saw the tweet which I made in August of this year, 2019. Yeah. And she said when she saw that tweet, she took a look and then she went into Pulse and she took a look. Yeah, but she's also been to grow. To her credit, she's also been to grow. So she knows that you start with your research. She said she took a look into it and she ended up buying it for $3 the same time. So that's from August 12th. So if it's at $5.01 today, that would mean that she is currently up 67%
in couple
from August 12th to, at this point I have to tell you which day we record this, from August 12th to November 11th. So, wow. September, October, November, almost 3 months to the day.
She sound like you're thinking that you're getting on Pulse in 4 months.
Yeah, wow. So she repeated it. Wow, 67%.
Yeah. Yo, big up here.
In 3 months.
I love hearing that.
Yeah, and guess what? Pulse still undervalued, in my opinion. Yeah, in my opinion, Paul's still undervalued.
The no.
the PE,
If real estate is an investment and it revalue, then your value of your assets are worth more. Company is worth more intrinsically. So
there we go.
see there.
And then watch this though, because what them do is they're doing real estate in a nice way where the real estate also earns for them.
Yes.
So it's not just a revaluation.
It's a sit down
because them have Pulse Hotel in Kingston.
So that's some cash flow for them.
Yeah,
so
and
to reinvest.
And they have Pulse rooms up Villa and I of Stony Hill. Yeah, so they're actually turning money. And if I think I'd worked out the rough numbers based on it, I can come back to it. Just to see what the numbers are based on their first quarter results, which just dropped. Because this is like a half earning season, like I say. So the numbers just dropped. Guys, I hope you're prepared for this to go long. It might go a little long, but
Gems, bro.
Gems, yeah. And we're going into companies with this one. For free.
It's free analysis.
For free. Luckily, neither of us are experts, neither of us are licensed financial analysts, and this is not licensed financial advice. We're not telling anybody to do anything. We're not telling anybody to buy anything. Do your research, speak to a licensed financial advisor from any other wonderful 12, 13. How many brokers we have? 12? Yeah.
If anything, this should inform your analysis where you actually go out and look at it and you can say, hey, frame the conversation you have.
Exactly. You should ask your broker, you should ask your broker rep about something that you're interested in. And if you've heard us speak about it, the broker rep should be able to tell you something along the same lines that we're saying. Or if they're saying that we're wrong, or if you don't tell them it's us, you're just saying the idea and they're saying they're wrong, the reasons for the wrong has to be important. The most important thing is the why.
Why?
Yeah, the why is the most important thing.
Yes, that should be a favorite question.
Yeah, but big up her. I won't call her name, but big up yourself. You know yourself. She's come to grow. She actually wanted to come to grow and she couldn't make it, and she paid and something came up and she couldn't make it. So I offer her, as I usually do. If you can't make it, I mean, then tell me if you want a refund, whatever. And she said, no, let's keep the money. Tell me when the next one is. She come the next one. And she did. And I think she missed 2 and she ended up coming to.
She dedicated to her money.
Yeah, man. She dedicated to her money and it worked. Wow. 67%.
Bro. Wow. Way I like to say about your class. You said to me when you were first joining the group, when I actually started going into actual investment properly, you said you should be making more money than you pay Randy for.
Oh yeah, definitely, definitely. I always try to make sure that the people, because I do charge a lot for the class. 85 euros is not cheap, but
the value added.
You must. If you might think I'm not getting I don't want usual Jamaican.
So Randy's a capitalist that uses words like thief.
Yeah.
So Randy will look and say, "No, that 2 thief, man."
Yeah. If I'm charging you that, I'm making sure that you get treated the way I expect to be treated when I pay that kind of money. Yeah. If I go a party, if you save up the little money all year and go Frenchman, I eat at every boat. I drink everything, I dance till but when the music lock off, I leave. But the idea is get your money's worth. And if I have a product that I'm putting out there, my product needs to ensure that it can't screw up my name, especially because it's in a dicey space. And I'm open about the fact that a lot of the people in the industry, at least initially, have been very rough towards me. So I have no thing of a bit on point. But nobody can come to class and say, yo, scamming thing. Yeah, man. I make sure it says on point. Right. I make sure them do it. And to me, the true mark of whether or not I have impacted them properly is if they go out and do exactly what you do. Make decisions that show themselves that making money. I say to them at grow that I try to ensure that if somebody have, let's say, have 100 grand, might be a lot. Not everybody has that, but if you say have 100 grand put on and you take some money or you take some money, you find 85 euros and you pay and you come to the grow event, you should learn so much and have such an appreciation for you learn there that you should be able to make investments, and over the next 3 months, those investments should make you more profit than the cost of the ticket. So you should pay back the cost of the ticket. Yeah. That's what I try to ensure that the investments are. So far, I've managed to do it for every single one.
Which is right. So, a good amount of people think that. I get DMs, people asking how to start a brokerage, and them things that rich people think. And then I say, we had JMB on the podcast the other day, and they said the minimum is $5,000. And I said that, and wait, I have $5,000 put on right now. Yeah,
I think actually, let me give them. I mean, it's not an ad; they didn't pay for this, but big them up. Much respect for coming on. I think the minimum now is $10,000, but the reality is JMB is so good. You can't knock them for them customer care. If you go there with $5 grand, I'm not going to not open the account for you. They're going to open it same.
Open your account and say, go and save on it until.
Yeah. I don't know if they want to allow it. They might still
They
actually
might
allow you to trade.
allow you to trade.
But the minimum, I'll be responsible and say the minimum to open a JMB
Is
account is
$10,000.
10,000 Jamaican dollars. But I have heard many experiences from people who said them never, like them, they just did it and them go there for something else and say, oh, I'm open the brokerage account. And them says 10 grand. I say, I only have 7 grand.
Got you.
And them say, come in.
So, yo,
Yeah.
JMB, they democratized the investment space in Jamaica, and to this day they're living up to it. So yeah, man, big up Dayton, so you can, as you said, Dayton, Dayton says him alone now strength for, because he hear me on the podcast talking good about JMB. Because I usually pressure, I'm very critical when I talk about companies, because that's how I come off. That's my stance. I go critical, so I don't miss the wrong. I try not to miss the wrong things by looking at the parts of the company I like. So, big up Dayton.
Big up Dayton Lawton.
Dayton Lawton, yeah.
Dayton Lawton. Him say he's my brethren from a long time. I don't know if we're brethren, no. Him always back and forth until my brethren, but he's in his mind, but in my mind, he is my brethren. From high school. We've known each other since first form, actually. So, if you think I'm old, then Dayton is just as old.
Yeah, Dayton just out here.
Yeah, he's just as old. Because we went to high school, same time, same class, 1997. From then till the end of high school. I mean, our mothers know each other. Yeah, big up Dayton. I don't know if we're supposed to be at war now or not, but big up Dayton too, man. I like that, but yeah, that's what I want. I want people to get the kind of value they make money, and I want people to make money. I want people to make the money. Not nice like that when somebody start, try, learn it, and make the first to come money. Yeah, man, that's when you know say them serious about them thing.
Wait, trust me, I hear me talk about beat salary, brother. I started my initial investment was less than the minimum of the investment of the investment house that I was working at, but because I worked there, I got to open an account with no minimum. So I had less than $10,000, and the account opening requirement minimum was $10,000 at VM. I don't know if it's changed since. $10,000, I had less than $10,000, but I worked there, so them say, no minimum, open the account. And that was my starting. And I penny pinch every single salary, so I can. Some months I never make. I know, boy, the money not there, so I can't put money on the account this month. But I was a super budgeter to the point where I always talk about this, where my budget was so tight that I know every single spend coming in the month. So when I get my salary, I take the excess, put on an investment account, and it was so tight that right the day before payday when I buy lunch, it's cents alone leave on my account, on my card. So my account done cents. I can't spend anymore, because that's how much money I took off the account. So if I eat lunch today and the money and I get caught in a situation, then I can't go home, I can't eat tomorrow. If I don't get paid, then I not eat. It was that tight, and it really worked because I never had to be in that situation, luckily. But yeah. So if you hear me talk about how much money I'm beating my salary coming from, my salary now is quite a bit more than
it was back then.
More than it was back then.
Yeah, big up your current employer.
Big up my current employer. Yeah, man. I'm really started to out. You know. All right. So, humble brag. As I talk about things, big up my current employer. So when I moved from the old place to Mayberry, my salary went up about double.
Wow, people never talk about their salaries, that's good.
Yeah, man. So I went up about double. So I remember when I started tweeting every month that I'm beating my salary at my current place. Current, well, not current. At the half year mark, they again increased my salary.
And so maybe I send money?
Maybe I go on good. Maybe.
Even if you look on them results, and the results just dropped, but go on to
But what was hard was, boy, all right, so in June, I was beating my salary. Next month, my pay going to go up. I'm going to still have a tweet that I beat my salary. So I forgot beat the salary next month, even though the pay gone up.
You lock yourself into a social pressure. That social pressure, I like that.
So in my head, I was like, all right, I want to tweet that for the rest of the year. That's I beating my salary.
That's a nice goal. All right. So you give yourself a goal.
Yeah, that was my goal. So I have a tweet that for the end of the year, for the rest of this year.
You have November,
November, December.
to go. 2 more months.
Yeah, it's funny enough. So say that one. But yeah, so salary gone up, so it's no harder to beat the salary. But I still have to go do it. I chat about but boy, start investing so possibly you can beat your salary with the gains they made, and I had to do it. And I've done it. Currently, I've beaten my salary for the whole year.
As in, you've already beaten your,
I've already beaten
your projected annual salary?
It's been quite a while actually that I've beaten it. They never said that on Twitter.
Yeah.
So every month I'm tweeting, I beat my salary, but I have beaten it for quite a while now. So my year-end salary with the increase that beaten.
I said.
And I tweeted this one. Yeah, I think he got lost in the crowd. Nobody mentioned anything about it, but
well, now you know all the followers.
Yeah, I know.
That's not make sure say.
Yeah, you know the follow. I just want a conversation more than the actual follow. I want the
good conversation.
People see it and good conversation around the investing. So the following, it only goes so far.
I guess, yeah.
What are you doing with it?
Yeah, that's me. I mean, to me,
I think you have better reason for audience than me currently.
I get. Yes. Yeah. Well, yes. Yes.
Yeah,
yes,
because
yes,
you
because
want people to get in investing. You're actually talking about it.
Yeah.
I do,
Well,
but my drive for it isn't as much as yours. Yeah. I want to more inform the people and talk to them and go, hey, by this one actual proper recommendation. I can't do that now. Not doing it yet. Not doing it at all right now. But I prefer the conversation and we can talk about stocks. Everybody can be educated together about stocks. You want people investing, making money. I think your drive for it is more than mine. But yeah, so the tweet I mentioned that at the start of this year, start of 2019, my investment account, the money I had on it was exactly half of my annual salary
at the time
for 2019. So say it was 500,000. My annual salary is $500,000.
Or it's $1 million. Make the math easy for the people.
Sure,
so if let's say your annual salary is $1 million, you would have had
500,000 in my investment account at the start. So I'm trying to frame that it isn't that I had a lot of money and boy, I make 1% off it and beat the salary because I had way much more than your salary. I had to actually make that half of my salary, 50% of my salary, beat the returns from that alone, beat the actual salary.
Okay, so just so people are clear, you're saying that your salary for the year in this pretend salary for the year is $1 million.
I mean, just not money and not $1 million, guys.
Yeah, so I just doing it in simple numbers.
No, man, I'm joking. Yeah.
So $1 million would be your salary for the year, and you start the year with 500,000 there. And what you're saying is that at the end of the year, if your investment account is now over 1 million, you're not saying that.
No, it has to be over 1.5
It has to be over 1.5. That's what I just want to be
more
clear.
than the 1 million for the year so from the 500,000.
Exactly. So you have to make your salary plus have at least what it is that you started out with.
Yeah.
Okay, that both is bad. So in other words, you're literally saying that you have taken the portfolio that you had at the start of the year, which was half of your salary, and you have made that half of your salary pay you your salary.
Plus the increase
that you got halfway through the year, which made it harder.
That's a good increase too.
I don't think people, if anybody work out the numbers so that you realize you could hire yourself.
Yeah.
Yeah. Essentially, you took 6 months of your salary and you managed to make it pay you for the year. So you could have hired yourself this year.
Yeah.
Yeah. And people can do that. And this has been a good year to do it. The last few years have been a good year to do things like that. But we know that, right? But obviously, as we've seen coming from way back, there's so much that could have been done, so much that people have done, and more of it to be done. So I'm glad for that. Here's a tangent that we stopped in the middle of that somebody vexed about. We were talking about MDS. So we said that the revenue.
Wow.
Yeah. Somebody has to be the tangent police. So MDS 565 million in this quarter versus 500 million in the last quarter, and on the 6 months, 1.1 billion for this year versus the same 6 months last year, just 1 billion flat, right? And for greater context, the whole of last year, they made 2.2 billion in revenue. I'm going to jump straight on to the net profit. The net profit for the quarter, 6.5 million versus 15 million last year. What a drop. So that is what the brethren was messaging me and saying, yo, thank you for saving me from that, because he was in MDS and he was going to stick with it and giving himself all kind of reasons. Remember that little line that we say people believe a lie either because they want it to be true or they're afraid it's true. So I think he was telling himself all the reasons why it would be good. And that's not to say that MDS is a bad company. It's a cool company. It's obviously still profitable, but there's no reason to stick with something if you see it going into something bad, right? Yeah, man. Investing is like a magical taxi. If you see the pothole coming, you just disappear.
Jump out and walk around and say, meet me at the end of that.
Yeah, man. And when you come back out of the pothole, you're back in there again. 5 it up, trees. That's literally how you can do it investing. So he jumped out of it and he was holding out to jump out at $8 himself. And he never bothered jump out at $8. Him call him say him listen. Him jump out at $7 and change. And now with results like these, with what kind of drop is that? If last year was 15.7 million in net profit on the quarter, and this quarter is 6.5 million. That work out to, supposed to be a wicked maths man.
Next year around, I'll go on what the hell you're doing.
Yeah, you shouldn't podcast while tired, guys. Wow.
So yeah, 60% drop basically.
Yeah, roughly. Wow. What's the reasons that they gave for this,
Actually, I didn't read the report. I didn't read it.
You never read it?
I didn't management research and analysis. I just jumped to the numbers.
You jumped to the numbers? The
numbers tell a better story to me.
The numbers showed you. What do you remember where the drop happened?
Look at the gross profit numbers.
I soon look on it. Just for posterity, I can tell the people because I told them the 3 months. On the 6 month side, 1.12 billion versus 1 billion the year before. So they're making more in revenue. But less in profit. So some expense in there is eating something out, right? And the profit on the 6 months is 22.6 million versus 34.8 million. So the drop there again. What did they say? So when you look at the financials, the real drop is under admin expenses have flown by roughly 10 million from 47.8 to 58.2.
Oh, yeah.
From 47.8 to 58.2.
I'll bring it on the phone.
Yeah. Which then means that, admin expenses have gone up. Who knows what that means? On the 6 months, it moved from 96.7 or 96.8 to 109.4.
I'm find it.
So it's definitely
it's open on my phone already.
In the quarter. And selling and promotional costs also go up, by 8 mil. But I can understand
business with the candy.
I can understand they do have the candy distribution. Yeah. I can understand selling and promotional costs going up because revenue went up.
Revenue went up, yeah. So it helped.
Yeah.
You're selling and promotion helped.
Yeah, you can say that it helped there. You can make the assumption that it helped there. So you spend 8 million more on selling and promotion in order to help pull in 65 million more in 3 months. So for the company, that's okay, I guess.
Depreciation was marginal increase. So I'm looking at selling administration and admin expenses as the real jump, because you look at the thing there, you look at the gross profit, it's still above the previous quarter, but you look at the profit after operational expenses, it's way below. Yeah,
and the big two things that stood out to me are the admin expenses and the selling and promotion costs. And I will give the selling and promo costs because you pulled more revenue.
You spent 8 million more and got 65 million more.
Yeah, that would look good to me.
So admin can work like that, where you hire more people. So
you did something that had more administrative function to it, that had more administrative costs.
Yeah, but maybe it's not efficient if you lose more money. If you lose more money hiring them than
the cost of
the final profit of actually hiring, of bringing them in.
Sometimes, because business is not one-to-one. Because maybe it was worth it for me to do that.
No,
because it killed a competitor.
And then you in the future get more market share.
Exactly. So it's a long-term picture. So I wouldn't knock that.
Definitely.
But I don't know if that's what it is. And what stands out to me is that last year they had other operating expenses.
Yes.
And this year it's swung in a complete other direction, right?
So I have to check what exactly that is.
Yeah, that's something that I have to dig deep on. I won't go through that on the podcast. That's homework for you guys if you want. But the point is that I would look to see what could have happened there in terms of those, especially increasing admin expenses, because nothing else has had quite the same hit. In fact, they made less of a loss. Some people have made the FX loss. Loss on foreign exchange. they lost 5 million less than they did, almost 6 million less than they did the year before.
But I
Same
have to,
period last
I have to
year.
investigate what exactly. I think companies are handling the FX poorly. We've spoken
think
about
so?
this before in terms of how they react to the FX. Every time FX go up a ball versus we have a hedge. But I saw the BOJ is working on a platform, a foreign exchange trading platform. So I think it'll be easier for companies to buy into a forward hedge, like all the price I think they're low, so I may get it now.
You think they might start selling JMD futures?
JMD futures, boy, you
That would be nice.
do it. Yeah. Find some way somehow. Brokerages can do it. Banks can do it.
To get it out to the public.
Yeah.
Yeah.
I think probably.
Is it a public? Is it a public or accredited investors? You know? Well, sorry, I'm thinking of it from the side of
where we can get into it.
Investment, not the utility of it. So obviously the companies need hedges, and they should be. If you have a company right now and you buy US dollars or do something in US dollars every single month, you should be talking to your banker about a hedge facility, so that you don't have to be exposed to the heavy fluctuations.
Exactly.
It's normal.
It's normal
everywhere else in the world.
Jamaica has been
that has this problem.
Yeah, the current foreign exchange regime is what is normal everywhere.
Yeah, and it's good.
It's better.
Yeah,
you might not think it, but trust me, it's better.
Yeah, let me pause and big up WIG.ja, the Bank of Jamaica, on Twitter especially, them new account.
The new account, man.
Everything. Yeah,
good conversations with them.
Yeah, I like what they've been doing. Maybe we'll have them on, have them talk
big
to us
push.
for a little while.
I would really love that.
Yeah, that's actually a nice thing. I'll consider that. I'll touch a button or two that I know up there. But big them up for that. But yeah, you're saying about the current regime in terms of how it's handled.
Yeah, how it's handled, the actual movement of the dollar. It's more reflective of market perception and what actually happened in the market versus.
There we go.
You know how Randy mentioned it to me yesterday. I don't want to steal the thunder.
No, it's fine.
Yeah, that's give props. But he mentioned yesterday about the BOJ's mandate being inflation, controlling inflation, and not the foreign exchange. It doesn't move too terribly. So I think they have.
That is their mandate. That's a very important thing. Because people tell you this, and that's a point I think that should be made. People tell you, say, yo, there is FX movement when the US dollar fly against the Jamaican dollar, right? When that happens and the Jamaican dollar weaken, which is what it is, everything costs more.
Not necessarily.
The Bank of Jamaica has said publicly that their mandate is not to stop the Jamaican to US dollar rate or any currency rate from fluctuating. Their job is to manage prices in Jamaica. But the truth is, we shouldn't necessarily care if that rate fluctuates as long as prices don't move. Of course, people go, yeah, but when me have to buy it in a foreign and sell you, so a rate go up, it costs more.
So that's when the BOJ will probably step in.
Yeah, but the BOJ does things to manage that and
exactly.
have it done. Yeah,
they fix it.
Yeah,
and where they go to the market and buy or sell. They do that, just not on your time, more on the time when, okay, this will affect inflation. They have time selling. I think they did one other day. But yeah, they do that. So their mandate is inflation. So if you're cursing BOJ about where the FX is going, it don't really make sense. So I guess so. That's not what they're looking out for, and they don't control that.
Yeah.
It really is what's happening in the market, or somebody. A big bond, typical example, a big bond going to mature soon, and it's paid in US. So we have to go buy some US.
In order to pay the
we
bond.
have. So, and then push the US, pressure the US go upward.
Yeah.
And conversely, when we have selling of USD, then that will push the USD down.
Yeah, because supply and demand. When the demand drops, or if the supply outpaces the demand, the prices can fall or should fall. I'll leave that one for the economists. But that's exactly how it works and should work currently. So, to bring your example into real life, we know that JMB is making that big move with Alliance. Yeah, and they're paying how much billion? Or is it million?
It's almost 12 billion Jamaican. So it's almost it's a couple million US.
Yeah, well, 200 and odd million US dollars that they'll have to pay. So they know they have to pay. Them collecting it, and as soon as they're collecting it and they're buying,
and got money,
they're increasing the demand heavily, right?
Yeah.
Because I remember, I could be wrong, so if I'm misquoting the governor of the Bank of Jamaica, but I remember him saying that like for the quarters or so far for the year, there's like 800 million US worth of business that's being done, right? JMB alone is 200 odd million out of that, just in that one transaction, 200 odd million alone at one time. Yeah. So of course the rate
of course the rate is going to fly. We are fourth of the business we're in the 11th month of the year, and we're raising a fourth of the US business for the
entire year
so far.
That's
crazy.
Yeah, that's a lot of crazy.
So
it's not them alone, It's not JMB alone,
Exactly. Although US business doesn't stop while JMB does its thing.
Exactly.
So regular business happening, probably some extraordinary business other places.
I'm sure a little bit at the end of the year, the Christmas rush might be hitting it. I mean, it's not a major
manufacturers
thing, but so on. People buying stuff, all kinds of things. Other little smaller bonds that have to pay out, corporate bonds that have to pay out, local, smaller, but still US dollar.
So US dollar.
Yeah. Dividends have to paid. ECL not do a dividend with it.
Yeah, they do.
And their dividends are US dollars.
Yeah. Margaritaville announced one recently too.
Yeah, so there's some pressure there.
Yeah,
but that means it will be interesting to see if it falls in the future when the pressure eases and what it falls by. Remember, we went up to 130 already and dropped all the way back to 125.
Yeah.
I never said that in my entire life. I don't know that could happen.
Bam, big up Bam Productions.
Yeah.
So our producer, Bam, he was asking Randy, because Randy did something today. Randy loves charity, guys. he actually does.
I love charity.
Funny, I cussed him already about it, where he said, Randy, basically spreading yourself thin, caring about
too many people.
But he did something at Wilma's boys' school or girls' school?
Boys.
Wilma's boys' school today. He went to them speak about
farmers.
The fifth farmers. When he speak to the fifth farmers about investing, because they're doing the stock exchange game.
Some
of them are doing the stock exchange game.
And apparently David had gone to them weeks before. So big up JC night.
I know he went to JC. So.
So I guess
must spread the love, man, more than him old school. I love them things. They rated big up. But he was speaking to them and he said all the questions he got was about Forex. Forex, people love the Forex. They trade in.
And it's so nice.
It's so nice,
and it's a foreign thing.
Boy, make a bag of money. Some people really do make money in it.
Yeah. Stop loss.
Consistency, I don't know about that. But I know off, but they're not the typical what we think about it. So Bam was asking what exactly is Forex. I know Bam, he did qualify to say he knows it's foreign exchange, but in what way do people do it? So I was explaining to that people they trade it. So they go and say, oh, cool. You go up, I buy it, it goes up, sell. It goes down, and they buy. But I was talking, we see it on the market. I'm not sure if people think about it like this. We spoke about shorts before. And I said, Forex is an inherent short. I made a tweet the other day about people should be doing well if people that been buying and imagine buying and shorting the USD against JMD throughout this year. You even said imagine we don't even have to imagine.
Yeah, because there are people
been doing it.
Yeah, people doing it.
But Forex has an inherent short.
Yeah, what do you mean by that?
When you're regular shorting, you go. You find a way to bet against a stock, basically. You get a contract.
Regular shorting, you make money when the stock falls.
When the stock falls.
Yeah.
But it's not, you go and you do a contract, you borrow the stocks and you sell them and you buy them back when they're down. But Forex, whenever you're in one thing, you're shorting the other thing.
It's a pair. It's always a pair.
So
which is why it trades in pairs.
It trades in pairs. Yeah. So when the US is going up, it's good to be in US. So you can sell it into Jamaican. And when the US is falling against Jamaican, you're actually making money because the Jamaican is now being valued more. So when you actually buy the US at a lower price, you're just pricing that.
Say that again because everybody lost.
All right. So US and Jamaican, they move. So if the US is strengthening against the Jamaican and you're in US, then you're long on US.
Yeah, so you have an investment in US. So in other words, you hold US dollars when the price is flying up, like right now.
Yeah, so and you're actually betting against the Jamaican.
Yeah,
so
you're betting that the Jamaican dollar.
Betting Jamaica is falling.
Yeah.
So when you buy the Jamaican now, you switch sides, you're long Jamaica because you're hoping US is falling against the Jamaican. So you're shorting the US. So whichever one you're in, you're shorting the other. So if you want a short and you want a market where you can short easily, because Jamaica, we can't short stocks
as easily
right now. When the exchange sort of themselves and implements that, then sure. But if you want a shorting market, then Forex might be a thing. I'm not saying to go day trade it, but if you have reasonable confidence of how the exchange rate will move over a longer period, like the 3 months or the 1 month, you say, boy, right now JMB pressuring the thing there, then it'd be a good thing to buy and sell. And I think a lot of people are more informed about FX movement than stocks.
Oh, no doubt.
Yeah.
Because one is simpler.
It's
one
right
pair.
in front of you.
Yeah, it's one pair.
Versus I have to go find opportunity on the market.
Yeah.
But you know, I love stocks because I think I've made a lot more money than a lot of people that have been doing the FX game.
Yeah, so, and I'm sure people listening go, no, you don't understand FX. FX people make money, and of course,
sure.
I don't think people realize. I know for me, how I speak, for many people, especially industry people, oftentimes I know I sound like I don't know what I'm talking about. I sound like I know a little thing. And I deliberately don't ever try to sound more like I know more. That one I've never had to prove that I know nothing in my life. I mean, if I have to prove it, I show it. I'm good. But also, to prove it to the industry people, you have to speak like the industry people.
I got corrected on my tweet the other day.
What did you say?
I'm not wronging the person for saying it, because what I did say was
incorrect.
It was incorrect.
What did you say?
My pin tweet is the interest I've gained on the stock market has outpaced my salary, basically. But on the stock market, you don't get interest. But I said it like that because I know people understand it as interest.
You speak for the people, but I get you right. Yeah, it's not.
It's funny. I speak for the people way less than Randy does. But so
that's probably why you get way less flack.
Yeah. But that's still true. But at the end of the day, if I want the conversation, then I really do have to speak for the people, because other people are new to it and they really want to get into it. And I think I take that for granted. When I was coming into it, I did have a lot of industry terms.
And it was how I spoke that allowed you to get into it, but you did already know a lot of stuff. Yeah.
I was school, taught a lot of it, taught finance.
And then work.
I got into an investment house, stock into the analyst stock. I was right in the place for me to... I was in the space already for me to acquire that jargon.
Kind of knowledge, yeah.
Yeah. But more around the use terms, I don't know. I'm telling drop a term and I have to search it.
Yeah. So, sometimes.
It only make it so like...
Yeah, I mean, when I'm talking to the public.
Yeah.
When I'm talking to the public, I keep it low, yeah. But
man.
The terms have their uses. So MDS, we avoided last night. We just go through MDS latest results. So those are hot. And we talk about Pulse. Pulse and at $5. Nice. But Pulse, funny enough, I said that I thought they're still undervalued. Their PE right now is $12. Versus the average market. The market average PE is 29.57 as of today. So it's half the PE.
Half the PE of the market.
Yeah. And I you know what I had done? I had said that I would look at these numbers, but I remember that.
PE. You want to talk about PE?
You can talk about PE if you want. I'm not touching that. With people getting enough drama.
PE is one of my favorite topics. Not necessarily to talk to a lot of the market participants that are in industry. They like to give PE flack.
Flat? What do you mean?
Flack.
Oh.
Like they try to say, PE is a bad metric, or my favorite one, the US not run upon PE, why we do it? Okay, let me put that to rest. PE is heavily used in developed markets and the US specifically. Look at any valuation, look at anybody that the analysts in the US actually consider them to be proper, really good analysts, a lot of them, because they dig way deeper and into what's happening with companies and industries than what we do out there. A lot of it because they have a lot of places where they can apply the research, a lot of places where the research is there for them, like somebody's randomly tracking this metric and it's applicable to an industry, or how much traffic on the road. That's a metric that track. In Jamaica, I don't know about that one, they still. Probably some places, but not across the country. But yeah, so they speak about PE. Because, as we said, if I'm investing in a company, I want to know it's profitable.
Wait, sorry, I wasn't paying attention. So what they don't track in Jamaica?
Traffic across the country. Traffic on certain roadways.
That's a good. I think they do. But you mean like active?
Active and every roadway at every time.
Maybe if somebody listening and know the answer that you can tell us. I don't know.
Yo, if you can find that, point me to that research. Please.
Well, Google. You can ask Google for it. Maybe.
No, man. If somebody in Jamaica
actively does it,
then I want to know. I want to see that, because it can inform all the decisions that we can make on the market.
Yeah, but yes,
Yeah.
I can understand. Yeah, I know where you're coming from with that. I won't say that one, but well, with the traffic management system, somebody handles traffic. Yeah,
But they know the traffic on Oxford Boulevard at X over this month. And
I do not know.
I
That's an
want
interesting
to
thing
know
to
that, but
find out.
that's
Yeah.
some a lot of places in America. My brother was telling me about the thing there. The traffic trackers, this sort of thing in the road, and they track
but
when
those
four
are in
tires go
Jamaica
over.
also, you know. The
But how-
sensors.
But how widespread?
Well, in Jamaica,
Okay, I see.
because the sensors are anywhere the light stoplights are, and there aren't that many stoplights, especially once you leave the
But you point me to that
urban areas.
if you hear me talking foolish, it's not be done. Please point me to it. I really
or
be
no,
thankful
or
for
maybe
that.
one of the people, because what I'm finding out these days that we have a lot of obscure listeners who really, especially episodes with just you and me like this one, that's where the people are really into the podcast listening, and they link you. Have people come to me at bars, and people come to me on the road.
Yeah,
people, and
I've
the
had some
obscure
weird
people.
encounters, but not weird. I never know people recognize me by my voice.
Well,
More
yeah.
than once, people they don't know my face because I have a dog picture on Twitter. But you
Really?
hear me talking. You
People just hear the
people
hear the
and say,
voice
"Oh,
and
you're Danai,
know.
right?" I'm like,
Wow,
all right.
that is wow.
I
Because I've
remember-
deliberately kept the podcast. Like I don't throw up a picture with every episode. I keep it just the logo. And I'm that big on the
Khalil has launched somebody. We were at the table.
Yes.
And
I would go over and them say, Randy. The brethren introduced us to his friend, and him say, who? Him say Randy. I say, oh, nice to meet you. And him say, from the podcast. What? Look, we hear the voice.
Yeah.
I didn't know you at all in terms of looks. You're right. It never occurred to me that people don't really see a lot.
A girl was standing up, and when you were standing, and you were over talking some guys, and then I spoke to the server, and by the time I turned, I'll big up. I'm bad with names.
We get into
well, you're really nice in your approach. I appreciate that. So big up you. Let me know if you hear this. I think her name was Yannick. But yeah, she turned around and said, "Oh, you're Danai, right?" And I think it's the voice. Cause she never said anything until I spoke.
The girl I was sitting by
sitting
the
right,
table,
sitting on the table.
Right by us?
Yeah.
Oh wow.
I spoke to the server and turned and said, "You're Danai, right?" Like, oh. Yeah,
wow.
But more than one people say that. I know it by the voice. And I was like, it's cool. So
you say you need to talk
some
more.
good reach. Oh, but yeah.
All right, guys. So that's the end of episode 14, part 1 of a 2-part series. Like I said, we'll let you know when part 2 goes up, and of course we'll tell in the beginning of part 2 that if you want to catch up, you listen to part 1 if you have the time, and then part 2. But putting the two of them together, I wasn't going to put you guys necessarily through more than 3 hours of listening. Not that I don't think the content was good. I do think it was good. I do think it has good gems. And the second part, I can tell you, we go even deeper. We go deeper in some companies. We actually bring up some financials. We talk the way we usually talk. So I enjoyed it, but I didn't want to force anybody through that long of listening right now. Hope you enjoyed it. Hope there were actual gems in there to all of you, because I think so, and I know Dan I think so, but I don't know if everybody thinks so. So feel free to give me the feedback at RTRO on Twitter, or you can also do it directly to the podcast account, which is at earnings_season, or Danai, which is at HDanai. Let us know. Hope you liked it. Tell us if you do. Tell us if you didn't. Tell us the stuff you want to hear in the future, and look out for more. This is earnings season. Thank you.